It is time now for December's ADP payroll report, coming in at 164,000, which I believe is a beat on the upside. Street looking for 130,000. They revised up the last month or just a little bit. Maybe it was revised down. Guys, can you scroll up a little bit? I just want to get the bottom there. I forgot what it was. Okay, so 130,000 was the estimate. Goods sector up 9,000. Service sector up a strong 155,000. And there's the payroll estimate for Friday for the government report, 170,000. So this would be in line with that. And they did revise this already down the November number to 101,000 from 103,000. Looking at it by business size, pretty good across the board, 74, 53, and 40,000 across the board, small, medium, large. And then pretty good job growth by sector as well. Leisure, hospitality coming in strong again. Education, health services. Those are the two sectors that have really been leading, with finance activities also doing well. Manufacturing down 13,000, one of the few sectors down and down big. Now, this is, I think, some of the more important data that ADP provides is this wage data, with job stayers down 5.4%, down to 5.4%. That's 2 ticks down from November, and continuing a slide that we saw beginning in September 2022, job changers up 8% year over year. That's a stronger number, obviously, but it's down from what it's been. Becky?
I just realized the weakness with the ADP number in terms of trying to figure out the most important number from Friday. I think Friday, the number we're going to be following most closely is going to be average hourly wage increases, just because of the inflation picture at this point. ADP has that information.
They have that information, and the reason I emphasize every month its importance is because their data set is so much larger and complete than the government's data set. In fact, for more on these numbers and just this fact here, let's bring in Nela Richardson, chief economist at ADP. And Nela, I don't want to denigrate the other numbers by praising the wage numbers, but tell us how big the data set is for the wage numbers versus what the government is providing us with.
Well, first of all, Happy New Year. And I'm happy to do that because we're looking at 10 million individual wage earners to calculate our pay insights number. And that's from a sample of 20 million that we start from. Why 10 million? Because we are able to match each individual over time. Right. So we're not talking about cohort effects or the fact that one sector was stronger one month than the other, or that there were a lot of part-time jobs in the second half of the year compared to the first. We're talking about the same individual matched every single month for over a year. And that gives us a really robust, fine-grained measure of wage growth. And what I tell you, Steve, and what you already know, is that pay deceleration is the story of 2023. After moving sideways in terms of growth for the better part of 2022, we actually did see that deceleration through 2023. And that means any specter of a wage price spiral that pushes up inflation has all but disappeared.
Yeah, Becky, I'm going to promise you, I'm going to come back and do a whole segment on the wage data from ADP, okay?
Because I think their number is going to be better.
Really important, and I'll show you what that does versus the government data. But let me just use the time I have with Nela to talk about the job market. Nela, you didn't decelerate as much as some had thought. How do you overall characterize what's happening in the job market? 164,000, still a little bit above trend, but not as much as it's been.
You know what? I was actually a little surprised about the rebound because we had been seeing about 100,000 jobs for the past 2 months, and it was really driven by the slowdown in leisure and hospitality. What we saw in December was consistent with a very strong holiday travel season, a very strong holiday retail season, which people were moving around, they were buying things, they were going places, and we saw a return to leisure and hospitality. That not only fueled that industry, it also fueled small firms, which are over-indexed in that sector. So if this keeps going, if we're seeing above trend growth into 2024, that's a good sign for the labor market. One note of caution, manufacturing. Second note of caution, we still didn't see retail hiring as strong as it was before the pandemic. So we're still low compared to 2019.